the really big money who just realizes that, wow, this is for real and I need to do something. I need to bypass my money manager and take initiative myself. When that really big money looks to gold and silver the way that the people watching this show have for a long time, what is plentiful and fair premium real quickly becomes not in both categories. So I think it's a great time right now in terms of price, in terms of availability, in terms of premium, especially measured against the backdrop domestically and internationally of all of the things stacking up against the dollar.
Andy Schectman, the president of Miles Franklin Precious Metals and Global Investments, a U.S.-based precious metals dealer that offers a full array of gold, silver, platinum, and palladium products, says this might be the best time for existing and prospective stackers to buy gold and silver before prices begin to rise again in 2023. According to Schectman, the amount of gold and silver contracts being delivered off the London Bullion Metals Association, LBMA, is much more than the registered category, the category backing all the contracts on the Commodity Exchange Center, Comex. Millions of ounces of silver and gold are getting off the exchange weekly, yet prices are dropping, and premiums are very low compared to their levels at the thick of the banking crisis. Schectman says all this is about to change, and whatever is left of the available supply of physicals is not going to meet the panic demand that would hit once investors realize what's happening. This brings to mind the opening argument from an article on the SchiffGold website describing the impending failure of the Comex system if investors were to rush into physicals at the same time. The article reads, "The current banking crisis could not have come at a worse time for the Comex system. Inventories have seen massive depletion over the last 2+ years as investors have slowly been pulling physicals out of the vaults. I've previously called this a run on the vault but labeled it a stealthy one, as though certain investors did not want to raise the alarm but slowly take possession while inventory was still available." Schectman recently sat for a discussion with the Liberty and Finance channel, where he discussed a much-needed update on precious metals, especially gold and silver. Being a bullion dealer and an unrepentant stacker himself, Schectman is at the forefront and has a lot of insider information about the precious metals industry. That is why he says this might not only be the best time, it might be the only time to get silver and gold at current prices before demand increases and investors realize the supply for physicals has been really depleted. And he believes that panic demand is going to begin much sooner than many people expect. Before we listen to the insightful discussion and analysis from Andy Schectman, please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss any of our videos. Also, ensure you drop your comments and observations in the comments section below. Everything helps with the YouTube algorithm and greatly contributes to the channel's growth. Thanks, and enjoy the video.
Just the first 4 days of May deliveries saw 1,744 gold contracts delivered, taken off. Multiply that times 100 ounces. It's 1.744 million ounces of gold taken off in just the first 4 days. And it was quiet. The silver deliveries in what is typically a very big month for deliveries, very quiet on Comex, but that is done for misdirection, because if you look at what's called the exchange for physical, those are contracts written on Comex sent to the London Metals Exchange in exchange for physical. Last month, 112 million ounces were taken off of the London Metals Exchange. This month, 118 million. You're talking 230 million ounces were delivered off of the London Metals Exchange in what's called exchange for physical. This comes at a time when, for the first time since 2017, and maybe only the third time ever, the registered category, that is the category backing all the contracts on Comex, is below 30 million ounces at 29 million ounces. So in 2 months, we saw literally 10 times the amount of silver that is backing Comex delivered off the LBMA. And when you look at India last year importing 304 million, we're getting to the point where the big money who has been trying to quietly, methodically de-dollarize using metals and the Western suppression to run cover for it, they're running out of ammunition. And one of the things that I find most interesting is that premiums right now and availability has gotten better and premiums have come down. Now, it was complete and total chaos for 3 weeks after Silicon Valley Bank. And then all of a sudden, once again, people's memories are so short everything's okay. Everything was bailed out and taken care of. We're back to business as usual. And things have slowed down. And I'm very surprised by it. But when I see what's happening 2 steps above, it's only a matter of time, because the most sophisticated investor on the planet, who's closest to the information and to the wallet, is showing us that they are rapidly and with continued vengeance pulling metal off of the big exchanges, which will lead to a trickle-down effect, if you will, to the retail market. Something is going to happen that's going to jar people's memories again. And while it's still busy and considerably busy, I'm shocked that the premiums have come down a little bit since last month, when things were insane, and the availability is really quite good right now. What does that really mean? It means that it's good for now, but if you see a greater expansion into the mainstream, I think it's a great time right now in terms of price, in terms of availability, in terms of premium, especially measured against the backdrop domestically and internationally of all of the things stacking up against the dollar. Then again, I quite frankly can't see a better time to ever add to your stack right now, because the premiums are the best they've been really in the last 45 days or so.
According to Schectman, a bigger event is coming that would push investors to the realization that they need to get their money out of the financial system. As they have done for thousands of years, investors are going to flock to physical gold and silver to protect their investments. It is a surprise that this is not happening already, with the severity of the U.S. banking crisis. Many experts agree that the Federal Reserve and the Biden administration are keeping a close lid on the crisis, with elections so close. But it's not difficult to see this when you realize that the combined value of the 3 collapsed banks is more than the worth of the 25 banks that failed in 2008. If this crisis spreads further, the scale of the impending collapse for an economy that is simultaneously being plagued by several economic and geopolitical issues might easily surpass the great financial crisis. Let's get back to Schectman's interview, as he further discusses his views on price manipulations and why investors are about to get a very steep reality check.
People who have invested in gold and silver long enough understand the disappointment and the counterintuitive nature of price in this market, where it just doesn't make sense. Well, take a step back. If you are trying to misdirect the public, the best way to do it is through price and through rhetoric, and they've become very adept at doing that. So none of this surprises me, and that's why so few people are invested in it. As we've talked about forever, 0.5% allocation in the entire financial matrix of the United States. Well, okay, that's because of the rhetoric and because of the volatility and the counterintuitive price action. But, by the same token, even those people who own it, they've either learned to deal with it, or they're just, they know that their conviction ultimately mathematically plays out. I look at this, and mathematically, I see no way that gold and silver don't really, really get expensive at some point. I mean, look, take the bricks out of it. How the hell do you pay for Medicare, Medicaid, Social Security, and government military pensions, which are off the balance sheet and account for $130+ trillion, plus a $31 trillion debt? When Social Security tells us that they'll be bankrupt in a decade, they already are, with $76 trillion in IOUs in it. When you look at the largest asset in this country being student debt, according to the 2022 balance sheet, I mean, we're an insolvent country. And in order to pay for all of these obligations, let alone the ones that are funded, the unfunded obligations, the Medicare, the Medicaid, the pensions, how do you do it? And the only way you will do it is either it'll be by inflation. Or if you try and, tighten up the balance sheet, if you really try austerity, try to get your balance sheet in order, you blow up the whole system. So it's either inflate or default, inflate or die. And I think ultimately people need to understand that looking at these short-term gyrations isn't the way to win this game. It's to see the forest for the trees. Don't get blindsided by the rustling leaves. Take a step back and say to yourself, how the hell does this ever work out? Why do you think the central banks are buying more gold than at any time ever? Why are all these countries moving away from the Western hegemony? because it's not just the sanctions, it's the mismanagement of the currency and the fact that they see that hey, do you want to sell your oil or your party favors for $1 that ultimately will depreciate in value through inflation, or for treasuries that are getting absolutely killed the way that they're affecting the regional banks and then all the banks for that matter who are loaded up on treasuries with 2 and 3% coupons. And I think ultimately the math is on our side, and this is one of those sweet spots where if you don't realize it, you're ultimately destined at some point to realize it and pay a lot more money for it if it's even available.
Central banks around the world are accumulating gold and silver in record numbers for their reserves, especially the central banks of BRICS nations and their allies. And every day, it seems one more country is considering joining the alliance or applauding it for the initiative to go against the United States. This is why renowned stackers like Schectman are not fazed about gold and silver prices like smaller retail investors. There is enough evidence to support the manipulation of the prices of these assets to keep them down. But let's look outside prices for a minute, as Schectman counsels. What asset class do you turn to when the United States may very well be on its way to default on its debt obligations, all while heading towards at least a moderate recession, more banking sector crisis, and possible dethronement of the dollar on the international stage? Let's know your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks for watching.